Bitcoin, an intangible asset, has been and is changing the financial market in ways no one could have imagined. Born in the context of the 2008 global financial crisis, when trust in traditional banks began to crumble, Bitcoin appeared like a ray of hope in the darkness, arriving at the right time and promising a fairer, more transparent financial system. It painted a dream of a world where financial control lies in the hands of the people rather than belonging to governments or any intermediary organizations. It is also reshaping how humans exchange, store, and value assets in the digital age. And today we will explore what Bitcoin is, where its true value lies, and what the future holds for this cryptocurrency, especially as President Donald Trump declares he will make the United States a cryptocurrency superpower. Pi from Us will bring you stories about finance, cryptocurrency, and the Pi network in the simplest and most understandable way. And you will lose the least amount of money when stepping into this perilous world of cryptocurrency. It all began with the 2008 financial crisis. It originated from the bursting of the US real estate bubble, when millions of people borrowed money to buy houses due to low interest rates. However, they couldn't repay these subprime loans, causing major banks to fall into a liquidity crisis. This financial crisis created a global shock, collapsing the stock market. Worried citizens queued up in long lines to withdraw money from banks as trust in this system had now collapsed. Governments in many countries had to inject trillions of dollars to save large banks, leading many to question the fairness of the financial system. Why should ordinary people bear the consequences of the irresponsibility of financial institutions? Amidst this chaos, on October 31st, 2008, a mysterious document appeared, introducing Bitcoin, a bold new financial idea. The author Satoshi Nakamoto presented an electronic cash system that operated without intermediaries like banks or governments, meaning it was decentralized and protected by blockchain technology and cryptography. 2 months later, on January 3rd, 2009, the first Bitcoin block was mined, carrying a message from the front page of the Times: Chancellor on brink of second bailout for banks. This was a powerful message about Bitcoin's mission, with the major goal of solving the problems of traditional finance, including 1. The supply is limited to 21 million Bitcoin to combat inflation. 2. Every transaction is recorded publicly and immutably on the blockchain. There are no bailouts or printing more money. And 3. Bitcoin is not just digital money, but also an answer to the lack of transparency in the financial system. Satoshi built a cohesive community on forums like bitcoin.org and bitcointalk.org, demonstrating extensive knowledge of economics, computer science, and cryptography in discussions. Despite this, he always kept his identity secret, communicating only through anonymous emails. For about 2 years, Satoshi wrote the source code and improved the system, but by the end of 2010, he suddenly withdrew, leaving the project to other developers, notably Gavin Andresen. In his last email to Andresen, Satoshi said he had moved on to another project and then completely disappeared, leaving behind 1 million Bitcoin that has never been touched. The true identity of Satoshi Nakamoto remains one of the tech world's biggest mysteries to this day. No one knows what new project he moved on to. But he left behind a legacy that is not just blockchain technology, but also a philosophy of transparency and decentralization. Blockchain, the foundation of Bitcoin, is a public ledger that records and validates every transaction. It operates without the intervention of intermediaries like banks or governments. When each transaction is grouped into a block, and these blocks are linked together to form a chain, it becomes a permanent, unchangeable system, thereby protecting data from tampering. In traditional financial activities, transactions must go through intermediary organizations, incurring high costs and easily creating delays. Not only that, financial intermediaries also increase the risk of fraud and lack of transparency in transactions. But Bitcoin solved this problem by completely eliminating intermediaries, validating transactions through the proof of work (PW) mechanism. This means Bitcoin miners need to use computing resources to confirm transactions to ensure transparency. By solving difficult mathematical problems, transactions are confirmed and recorded on the blockchain, creating a secure and transparent financial system without any intermediary parties. Validating transactions via POW requires computers to consume a lot of computational resources. But this very costliness is what makes transactions more secure, thereby eliminating the risk of fraud. Because if someone wanted to change any recorded transaction, the fraudster would have to change the entire blockchain, which is almost impossible. More importantly, every computer participates in storing and confirming transactions, making Bitcoin secure and transparent. This solves the problem of currency control, overcoming the interference of banks and governments. Besides solving the problem of financial intermediaries, Bitcoin also addresses the issue of decentralization and control over the money supply. To put it simply, in a traditional financial system, banks and governments control the issuance of currency and adjust interest rates. This can lead to inflation or currency devaluation when central banks print more money. Bitcoin has overcome this problem by limiting the maximum number of coins that can be mined to only 21 million Bitcoin, meaning this virtual currency is almost impossible to inflate. With all these innovations, Bitcoin has demonstrated the potential for change in many areas, ushering in a new era in the use of currency and transactions, bringing transparency and security, helping to reduce costs, and creating a modern, secure, and highly efficient financial platform. Although it sounds very good, in reality, since its appearance, Bitcoin has faced a lot of skepticism from the public, especially from those who believe it is just a tool for scammers. The peak was in 2011 when a mysterious website on the dark web, Silk Road, dubbed the Digital Silk Road, became a place where people could buy and sell almost anything illegal, from drugs and weapons to stolen credit card information. To maintain anonymity and ensure transaction security, the only currency accepted here was Bitcoin. And Silk Road turned Bitcoin into the perfect tool for illicit activities, as users did not need to provide their real identity or open a bank account, making transactions as easy as buying a cup of coffee. In 2 short years, Silk Road processed 1.2 million transactions with a total value of up to 9.5 million Bitcoin, equivalent to billions of dollars passing through the hands of criminals. Of course, authorities could not let this situation continue. In October 2013, the FBI arrested Ross Ulbricht, the founder of Silk Road, at a library in San Francisco. Under the alias Dread Pirate Roberts, Ulbricht, then only 29, had built a multi-billion-dollar criminal empire based solely on Bitcoin's anonymity. He was eventually sentenced to life in prison without parole, and Silk Road collapsed, but the stain on Bitcoin remained. From then on, the media began to associate Bitcoin with crime, the dark web, and drug trafficking, a negative image that would take many years for Bitcoin to gradually shed. But that wasn't all. In 2014, the cryptocurrency community was shaken by an equally shocking event. Mt. Gox, the world's largest Bitcoin exchange at the time, abruptly shut down. 850,000 Bitcoin, equivalent to $450 million, disappeared without a trace. Hundreds of thousands of investors lost everything overnight. The CEO of Mt. Gox, Mark Karpeles, was arrested in Japan. Investigations revealed that the exchange had been hacked for 3 years, but the leadership had deliberately concealed this fact. Mt. Gox became a symbol of the risks and lack of security of crypto exchanges at that time. The attacks didn't stop there. In 2016, Bitfinex, one of the largest exchanges at the time, was also hacked, losing 120,000 Bitcoin. By 2019, Binance, currently the world's largest exchange, also couldn't escape being hacked, with losses amounting to 7,000 Bitcoin. Each attack was a heavy blow to investor confidence, leading to questions about Bitcoin's safety and security. Not only did it face security issues with exchanges, but Bitcoin also became a tool in sophisticated scams. BitConnect appeared in 2016, promising guaranteed returns of 1% per day, thanks to a secret trading method capable of generating profits in all market conditions. Millions of people flocked to invest in this project, but by early 2018, BitConnect was exposed as a giant multi-level Ponzi scheme. As a result, $2.4 billion of investor money vanished into thin air, marking one of the most damaging scams in the cryptocurrency industry. OneCoin was even more audacious, promoted as the Bitcoin killer. This project raised $4 billion from global investors. Ruja Ignatova, a self-proclaimed crypto queen, appeared on large stages promising a new monetary revolution. However, OneCoin didn't even have a real blockchain. Behind it all was just a simple SQL database. In 2017, Ruja Ignatova disappeared, leaving behind one of the largest financial frauds in history, severely damaging the reputation of Bitcoin and cryptocurrency. In general, those are a few of the scandals related to this virtual currency. And as Bitcoin became more popular, a new problem began to emerge: its environmental impact. The Bitcoin mining process consumes a huge amount of electricity, even more than the electricity consumption needs of a country like Argentina. Many coal-fired power plants have to operate at full capacity to serve this activity, leading to criticism that Bitcoin is contributing to the increase in climate change. Simultaneously, Bitcoin became a favorite tool for cyber criminals. Ransomware targeting businesses, hospitals, and government agencies all demanded ransoms in Bitcoin. A typical example is the attack on Colonial Pipeline in 2021, when hackers demanded a ransom of 75 Bitcoin, paralyzing the main fuel supply system of the United States. And the Bitcoin market has also frequently been accused of being manipulated by whales, those who hold large amounts of this virtual currency, who can easily create strong price fluctuations, making it difficult for small retail investors. However, despite a challenging start and being repeatedly viewed as a speculative or illicit tool, Bitcoin has gradually gained public trust over time. Trust in Bitcoin did not come quickly, but was built through a series of important milestones. It began with its launch in 2009, when Bitcoin was only known to a small group of technology enthusiasts and financial freedom advocates, attracted by the idea of a decentralized currency not controlled by banks or governments. In the early days, Bitcoin was not highly valued and had almost no real value. It wasn't until 2011, when associated with Silk Road, that Bitcoin became a focal point in discussions about privacy and financial freedom, causing many people to start paying attention. This was also when Bitcoin proved its important features: security and anonymity, something the traditional financial system couldn't offer. From 2013 to 2017, Bitcoin transformed strongly from a trading tool to an investment asset. Despite experiencing negative events like the Mt. Gox hack, the cryptocurrency community continued to improve the system, bringing more stability and safety. During this period, Bitcoin first surpassed the $1,000 mark in 2013 and quickly attracted investor attention, especially in 2017, when Bitcoin reached a record $20,000, affirming its real value in the eyes of the financial community and large investors. However, its strong volatility still made many people doubt its stability. From 2017 to 2020, Bitcoin continued to develop with the participation of financial institutions and large companies like Tesla, creating a turning point in the community's perception. Tesla's purchase of $1.5 billion in Bitcoin in 2021, along with the emergence of Bitcoin ETFs, strengthened this currency's position in traditional finance. These events proved that Bitcoin was no longer a short-term phenomenon, but had become a long-term investment asset, similar to gold. To date, Bitcoin has overcome initial skepticism and gradually gained the trust of investors and governments. Countries are finalizing legal frameworks to support the development of Bitcoin and cryptocurrency. Major economies like the US are also establishing positive regulations to promote Bitcoin adoption, while smaller countries like El Salvador have chosen Bitcoin as legal tender to stabilize and diversify their national finances. Bitcoin, from a controversial currency, has become a symbol of financial freedom and has gained public trust. However, Bitcoin's development journey has not been easy, as its value has fluctuated wildly and unpredictably over the past 15 years. The story of Bitcoin's price is a journey full of volatility, reflecting the strong development and changes in the world's perception of cryptocurrency. Satoshi Nakamoto created Bitcoin in 2009 when it was just an experimental idea with no clear value. By October 2009, the first exchange rate was published, with 1,309 Bitcoin for $1, based on the electricity cost to mine it. A historic milestone came on May 22, 2010, when Laszlo Hanyecz paid 10,000 Bitcoin for 2 pizzas, valuing each Bitcoin at $0.0025. This day is called Bitcoin Pizza Day and is celebrated annually, with the main purpose being to poke fun at Mr. Hanyech for spending hundreds of millions of dollars on food. Bitcoin began to attract attention in 2011 when its price soared from $1 to $31. However, this rally did not last, and Bitcoin ended 2011 at $2 due to controversies related to Silk Road. 2013 marked the first major boom in Bitcoin's price history. From $13 at the beginning of the year, it skyrocketed to $260 in April, partly due to the financial crisis in Cyprus, which led many to seek Bitcoin as a safe haven. By November 2013, after China recognized Bitcoin as a legal asset, Bitcoin surpassed the $1,000 mark for the first time. At the end of 2013, the price reached $1,143, on par with the price of gold at that time. However, this joy was short-lived, as in 2014, Bitcoin faced major challenges such as the collapse of the Mt. Gox exchange and China's decision to ban banks from trading Bitcoin, leading to a sharp decline in Bitcoin's price, at times falling below $200. The period of 2015 and 2016 was a time of slow recovery. Bitcoin gradually gained wider recognition as Japan legalized the currency and the number of Bitcoin wallets and users steadily increased. 2019 was a year of recovery efforts. Facebook announced its Libra cryptocurrency project, bringing global attention back. Bitcoin's price rose to $13,000 mid-year before adjusting down to $7,000. In 2020, when the COVID pandemic broke out, the cryptocurrency market in general, and Bitcoin in particular, experienced a sharp drop to $3,800 in March. However, things changed when governments worldwide pumped stimulus money to combat the pandemic, causing concerns about inflation. Bitcoin was seen as digital gold and became an inflation hedge. Bitcoin's price soared and ended the year at $29,000. 2021 was a record-breaking year with significant milestones. Tesla invested $1.5 billion in Bitcoin. El Salvador became the first country to recognize Bitcoin as legal tender, and the first Bitcoin ETF was listed in the US. Bitcoin reached a new peak price of $69,000 in November, attracting global attention. But 2022 was a challenging year as interest rates rose, the crypto market froze, and the FTX exchange collapsed, dragging Bitcoin's price down to just $15,000. By 2023, it recovered as BlackRock, the world's largest asset management company, filed an application to create a Bitcoin ETF, and Bitcoin's price returned to surpass the $40,000 mark. By 2024, the Bitcoin ETF was officially approved by the SEC, and Bitcoin's fourth halving event took place, causing Bitcoin's value to once again reach new heights. Looking back at Bitcoin's 15-year journey, from a technological experiment to an asset recognized by the largest financial institutions, Bitcoin's price has risen from a few cents to tens of thousands of dollars. Those who held Bitcoin from the early days have become millionaires, even billionaires. But of course, it wasn't an easy path. They went through 80% to 90% price drops, market freezes, and rumors of Bitcoin's collapse. Bitcoin has proven its ability to survive every crisis. Each time it falls, it rises stronger, and perhaps this journey will continue. So what will the future of Bitcoin be? What will the future of the crypto market be? Will any name be able to overthrow Bitcoin or realize Bitcoin's original goal of becoming a globally used currency? These very big questions can only be answered by time. But in your heart, which name do you think has the greatest chance of success? Let us know in the comments. See you in the next videos.